Scalping is a fast-paced trading style. Traders known as scalpers aim for small profits. They make many trades, hoping these small wins add up. They usually hold trades for seconds or minutes. Scalping is like grabbing pennies in front of a steamroller. Exciting, but risky. Imagine a surfer catching a wave. They ride it briefly, then hop off quickly. That's scalping. Short, sharp moves for maximum impact. Scalpers use technical analysis. They look for tiny price changes. They exploit these changes for quick profits. Scalpers need to be quick and decisive. They react to market changes instantly. They use special tools and indicators to spot opportunities. But remember, scalping is not for everyone. It's like riding a bull. You better hold on tight and know when to jump off. Trading styles are like cars. Each one is built for a different journey. Scalping is a sports car, day trading is a sedan, and swing trading is an SUV. Scalping focuses on tiny price moves within minutes or seconds. Day trading aims for larger profits within a day. Swing trading rides trends for days or weeks. Think of it this way: scalpers are like cheetahs, quick and agile. Day traders are like wolves, hunting in packs throughout the day. Swing traders are like bears, patiently waiting for the right opportunity. Forex, the foreign exchange market, is perfect for scalping. Why? Because it's open 24/5 and has high liquidity. Imagine a giant ocean with endless waves. That's the Forex market, always moving, always offering opportunities. Step 1, choose a currency pair. Popular ones are EUR-USD, GBP-USD, and USD-JPY. These pairs are like the big waves, offering more liquidity. Step 2, find a good entry point. Use technical indicators like moving averages and Bollinger Bands. These indicators are like your surfboard, helping you ride the waves. Step 3, set your stop loss and take profit orders. These are your safety net and your profit target. They're like your life vest and your treasure map, respectively. Step 4, enter and exit the trade quickly. Remember, scalping is about speed and precision. Be like a surfer, in and out of the wave quickly. Section 4. Scalping stocks. Quick profits in the market. Scalping stocks is similar to scalping Forex. However, it requires careful stock selection. Choose stocks with high volume and volatility. Step 1. Find stocks with high liquidity and price swings. Think of them as the big fish in a small pond. They're easier to spot and catch. Step 2. Use technical indicators to identify entry and exit points. Look for patterns like breakouts and reversals. They're like the fish's movements, telling you when to cast your line. Step 3. Set your stop loss and take profit levels. These are your risk management tools. They're like your fishing net in your cooler, protecting your catch. Step 4. Be quick and decisive with your trades. Remember, time is money in scalping. Don't hesitate when you see an opportunity. Section 5. Crypto scalping, navigating the volatile digital frontier. Cryptocurrencies are highly volatile, making them suitable for scalping. But be careful, the crypto market is like a wild west. It's exciting, but risky. Step 1, choose a cryptocurrency with high liquidity. Bitcoin and Ethereum are good options. Think of them as the gold and silver of the crypto world. Step 2, use technical analysis to identify trading opportunities. Look for patterns and trends. The crypto market is like a treasure map full of hidden clues. Step 3. Set tight stop loss and take profit orders. The crypto market can change rapidly. Protect your capital and lock in profits. Step 4. Be prepared for high volatility. The crypto market is like a roller coaster. Fasten your seatbelt and enjoy the ride.
Feel nauseous, believe me.
Section 6. Essential tools and tips for scalping success. Scalping requires the right tools and mindset. It's like going to battle. You need the best weapons and a warrior's spirit. Here are some key tips. 1. Use a fast and reliable trading platform. Your platform is your weapon. Make sure it's sharp and reliable. 2. Master technical analysis. Charts and indicators are your map and compass. Learn to read them well. 3. Choose a scalping strategy and stick to it. Discipline is key in trading. Don't chase every opportunity. 4. Manage your risk carefully. Use stop-loss orders on every trade. Remember, even the best scalpers can lose. 5. Start small and gradually increase your position size. Don't be greedy. Rome wasn't built in a day. 6. Keep emotions in check. Fear and greed are your enemies. Stay calm and focused. 7. Practice with a demo account. Before you risk real money, practice your skills. It's like training for a marathon. Remember, scalping is a high-risk, high-reward trading style. It's not for everyone. But with practice, discipline, and the right tools, you can master the art of scalping and profit from the market's every move. Good luck and happy trading!